Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordes and joining me is Senior Investment Analyst Rafi Boyajian. We'll be discussing upcoming Australian and Chinese data and the potential reaction in the Aussie. So Rafi, Australia has had success in keeping the coronavirus outbreak under control, and its economy is doing fairly well compared to its G20 peers. Do you think the Reserve Bank of Australia is done with monetary easing for now? And how will this impact the Aussie?
So Maria, that is right. So Australia at the moment does fare somewhat better compared to its peers, both on the virus front and in terms of the economy as well. And that's what we can see that through the Australian dollar as well. It's been one of the better performing currencies since mid-March. It's going to be interesting to see what the data is going to be, whether or not in the coming weeks, whether or not there will be the need for additional stimulus. But for now, markets appear to have made up their minds that the RBA is probably done for the time being.
Okay, turning to China, Australia's largest trading partner, we'll get the Asian market manufacturing PMI on Wednesday. It's forecast to have suffered a mild setback in June. What should we expect?
Those forecasts are probably out of date already, because we did just have the government's manufacturing PMI earlier today, and that actually beat expectations. We did see somewhat strong numbers in June, and that makes sense because we did actually see the reopening of many economies around the world, and that would have definitely given some boost to Chinese exports. So if the cash in manufacturing PMI is also comes in above expectations, then that would reinforce expectations of a V-shaped recovery, and that would in turn should also be positive for the Australian dollar.
Right. And finally, on Friday, we'll get retail sales figures out of Australia. A preliminary estimate for May showed a significant surge. If that figure is confirmed, what will it mean for the Aussie?
Well, it will pretty much confirm that they're definitely not likely to see any further stimulus in Australia, at least as far as the RBA is concerned. We did see a record drop in retail sales in April, and if the preliminary estimate is correct, we should see a record jump in May. So the preliminary number was a 16.3% month-on-month increase, and so given that Australia now, although we are seeing some mini outbreaks in Australia, it does seem like the government is trying to get control over that as well. So there's not that much of a concern for a second wave in Australia. And so if retail sales do bounce, it would indicate that the stimulus is working, and it would stress that the domestic economy is proving fairly resilient in this pandemic. The question is, will that be enough to how much of a boost would that provide for the Australian dollar? So the Aussie has been trading sideways over the past couple of weeks or so. We are seeing a little bit of risk aversion, some bit of a reality check for the markets, and so unless we see a subsiding in the risks of a second wave in countries such as the United States, which matters much more for global markets, then the Aussie might be stuck for a while longer in sideways range.
Rafi, thanks so much. And thanks for joining us at xm.com.